All right, so futures on the red this morning, but yesterday we saw a bit of a market rally. Some of it seems to be attributed to a very dovish Kugler saying that she sees more rate cuts coming. I want to ask you, we have the Fed minutes coming up later today. How do you see today shaping up until we get those Fed minutes? Are those still really relevant even after her comments, or is there something in there that can move the markets too?
Yeah, I think the market will look at those minutes because it wants to understand, like, how committed are you to these big rate cuts, right? Because it was a surprise, ultimately, that we're getting CPI 2 today, right, which is another market-moving event. Take that with this Google news that you just highlighted. Do you think that the market is very on edge here, saying, Fed, if you're willing to cut more, you're going to push the economy more, so therefore, stimulate the economy more. So I think this is what the market will look at. All
right, so you think the market's going to look at those minutes. What exactly are they looking for in those minutes, in your mind?
So why did they get actually to this 50 basis point cut after all? Now, Kugler said was I think, really clear about we really see a risk in the labor market developing, and we want to get ahead of that risk. I think that's the key message here. I think if the minutes are really making a big case about that, then you're going to get that repricing of this 50 basis point cut coming back. Yeah.
By the way, CPI is tomorrow. You scared me. I had to look on my computer.
Tomorrow, yeah, sorry.
Somebody else made that mistake on our team that today was Thursday, so you're not the only one. A lot of people are trying to get to the weekend. I want to talk to you about bond yields. They've been rising. Something very interesting over the last week since that jobs report. The short end has technically been rising faster than the long end. Have you noted that too? I mean, in your mind, what does that say to you about investor expectations, not only about inflation, but about what the Fed's going to do?
I think that's exactly what it is. It's the market's pricing out this 50 basis point cut. And interestingly, now the market is pricing about a 15% probability of the Fed being on hold in November. That's what's driving up the 2-year yield. So it's about flat with the 10-year, but it does indicate that there's some positioning about, okay, Fed, you can cut, but it may be slower because of one jobs report. I would say that's just one report. To Goolsby's comments, like, we're not looking at one data point, just at the report. There's more coming. So I think they stay on edge on this labor market. They're kind of concerned about it, so I think they want to get ahead of it. I wouldn't be surprised to see them coming back with comments that they could do more faster, simply because they see the policy being too restrictive.
Again, it seems like we had part of the rally yesterday based on those comments from Kugler and the idea we're going to get more cuts. How are you viewing the equity market overall? Yesterday we saw Nvidia have a big run up. Yesterday it was up 4%. Some of that's based on some of the comments that we got from the Foxconn CEO about what they're making for them. Overall, do you see this AI trade somehow taking leadership again, even though we're going to a rate cutting cycle that a lot of people thought would lead to cyclicals taking the leadership?
Yeah, it's still dominating the market, because if you look at Nvidia the pattern is in some sort of a wedge, right? It's broken out now. So Nvidia having such a weight on the market, I think that's the driver still here of the markets. They look at this AI story like this is unbelievable growth and so much spending on AI. It's going to lead to more investment, so therefore driving markets.
By the way, we're showing Nvidia right now up almost 1.5%. Big week for Nvidia, up almost 8% for the week. Last but not least, I've really been trying to ask guests about this. How do you view in the bond market? Do you see any opportunity in any part of the bond market? We've heard a lot of people saying the belly. What about you?
Yeah, the belly is interesting because that's where the yields are the highest, and where it's ultimately going to be about Fed's going to cut rates, is going to have that part of the market rally because the yield curve has to normalize as a result of that rate cut cycle. On the other hand, if you look at municipal bonds, you look at mortgage bonds, those are, I think, interesting too, because they're all really performing quite well in a lower interest rate environment.
All right. What about what about corporate bonds? I mean, the idea that we don't think we're going to see a big slowdown. The Fed minutes might confirm that today. Remember, we all thought like a big slowdown must be coming. That's why the Fed cut by 50 basis points. Does that make corporate bonds more attractive?
Well, in that context, actually not, but corporate bonds have been so tight in spreads that there's where I think a bit of the challenge is for investors to get, let's say, extra return. Obviously, the yields are attractive because they're still higher than treasuries, and corporate bonds have done well because the default cycle is really low. So I think it's a good place, but I think there's other opportunities. Think of mortgage-backed securities. Those are, I think, much more attractive because if rates are going to go down, mortgage-backed securities outperform.